The new overtime tax deduction is a federal tax deduction for employees for qualifying overtime pay that began in 2025, continuing to 2028. This provision allows for employees to take a federal tax deduction of up to $12,500 or $25,000 if filing joint for the premium part of the overtime pay. Under the Fair Labor Standards Act, the premium part of overtime pay is the half pay. So overtime is calculated at 1.5 times, and the premium share is that half pay. If there is overtime that is qualified and mandated for the states, that is not actually qualified under FLSA for the federal portion of this tax deduction. This deduction begins to phase out for those higher compensated employees, and you'll start to see that phase happen at $150,000 for single filers or $300,000 for married filing joint. As employers, they need to properly track and report overtime compensation through their payroll systems. This information will be included on employees' W-2s, likely in Box 14, although the IRS is still pending final guidance. It is important to note that this is a deduction, not an exemption from withholding. Overtime pay, including the premium portion, is still taxable for federal, state, and Social Security and Medicare taxes. Employees receive their overtime pay as usual through their regular paycheck. The tax benefit is realized later when filing their Form 1040, where they can deduct the premium portion of the qualified overtime based on the W-2 data from their taxable income, potentially lowering their federal tax liability or increasing their refund. If you have any questions about how this deduction applies to you or need assistance preparing your payroll systems, please do not hesitate to reach out to our team.